So let us now look at an example of cash dividends. So here there's a question which asks us that what are the accounting entries made by a corporation that has declared a dividend of 100,000 as cash dividend on March 15th, that is payable on 20th of April, and the shareholders record date is 2nd April. So let me just show you the timeline. The first date is 15th of March, and on 15th of March, the declaration of the dividend was done. So this is the declaration. On 2nd April, this is your record date. And then on 20th of April, this is basically the payment date. So what we are being asked is that what are the supporting accounting entries on individually each of these days. So let's look at 15th of March and how this assets and liabilities will be actually looked at in individually all these 3 days. So 15th of March, what will happen here is that on the date that is declared, you will find that there will be an entry called dividends payable that will form. So this will increase by 100,000, and since this has increased by 100,000, there should be a corresponding decrease at some place. The corresponding decrease actually takes place in the shareholders equity section, which reduces by 100,000. So this happens on 15th of March. Now let's look at what happens on the record date. On the record date, actually nothing happens. There is no entry that actually is taken place, so nothing changes as such. What about the payment date? When it is about the payment date, since this is cash dividend, there would be a cash outflow of $100,000, and here on the dividends payable side, this will go down by 100,000. Both the assets and the liabilities will match in this case. So this is how we kind of reconcile these 3 dates with respect to the cash dividends. Let's take a running example of property dividends. The date of dividend declaration is 5th of January 2008, and it is paid on 25th of January 2008 in bonds. And the bond has a book value of $100,000. The fair market value is $135,000. So the record date is January 20th, 2008. So on the timeline, what we'll have is 5th Jan 2008. This would be the date of declaration. Okay. In between, on 20th of Jan, this would be the record date. And on 25th of Jan, this will be the payment date. So now when we are talking about dividends, this in the form of bonds, you'll note that this has a book value and this also has a fair market value. So the dividends have been declared and its fair market value has been $135,000. So this is the amount of dividend that is going to be paid to the owners of the shareholders. So what is going to happen on the asset and the liability side on 5th of January? So we'll see that there would be an item called dividends payable here, because this is not yet paid, this is just defined. So here it will be 135,000, and like we saw in the cash dividend, shareholders equity will drop by 135,000. Okay, so this will happen on the date of declaration. Now on the record date, there will be no entry. Now let's look at how the asset and liability will look like when it is about the payment date. So on the asset side, we have the bonds. These were worth $100,000. So bonds will go down by 100,000. Likewise, on the right side, which has the liability side, we have the dividends. These will go down by $135,000. And if you look at these two, there's a mismatch of 35,000. So what this 35,000 and where this 35,000 will actually come from? Now think about bonds. Bonds were at cost price of $100,000 and the market price is $135,000. So when they are sold, actually there's a gain on sale of bond, and the gain is actually equal to 35,000, the difference between market price and the cost price. Now this gain on sale of land, actually sale of the bonds, actually flow into the income statement as an added income, gain on sale of bonds, and this actually flows into the retained earnings section of shareholders equity, and this bumps up the retained earnings by 35,000. So what we see here is that there's a match of 100,000 on the left side and 100,000 as net effect on the right side as well. So this is how the entries with respect to the property dividend will look like.